Well, car wash operator Mammoth Holdings, through Oak Hill Advisors, has refinanced its operations, totaling more than $500 million in size. The company, which operates 122 car wash locations across more than 20 brands, says the additional funding will help its goal of reaching 500 sites in the next 2 years. David Hoffmann is the chairman and CEO of Mammoth Holdings, and he joins us now. David, is a consumer under pressure still spending at a car wash right now?
Yeah, we're seeing the consumer hold up very well right now. And look, our performance coming out of Q3 was strong, mid-single digits, same-store sales growth, and we're seeing us touch double digits here in November. So we feel good, but it's all about, in this environment, it's all about delivering a great customer experience. And so we're heavily focused on just being the best Mammoth we can be at each site every day.
David, this discussion about car washes got a lot of us talking at Yahoo Finance, because it is one of those things where you sort of think, sure, it's not a big cost, but it does point to what consumers or where consumers are willing to spend right now. Just give me a sense from your perch, what you're seeing within your consumer in this current environment.
Yeah, just as a refresher for everyone, Mammoth is a pure play on express car wash tunnels, and our model is really built on the club membership subscription. So we're about 70% club membership, and that has held up very well because it's a great value. Arguably, the car is the number one or number two asset in anybody's household. And so look, we try to be the car wash for car people, and we think that resonates really well. But in this environment, we've had to work a lot harder, but we're seeing that business continue to strengthen as we go throughout the year. And so, look, but again, it's are you delivering a great experience at the wash? And so, again, we haven't seen any erosion on pricing. And it's, again, every day it's about delivering a really good customer experience and making sure that you're delivering on that promise.
And David, have you noticed in terms of consumer trends whether people are still willing to do the subscription versus perhaps making it more of a one-off, wash it when I can afford to sort of keep that money aside?
Yeah, look, I guess the more discerning customer is that individual paid consumer, not part of the subscription model. And that's the one that, if we've gotten much better at marketing to that consumer, whether it's just improving our hygiene on SEO or paid search, but ultimately down the road, it's going to be about making your experience a lot more stickier. This industry has been pretty primitive from a marketing standpoint and a digital standpoint. And my 25 years building out digital platforms we think that's going to be a big differentiation for us. And look, the money we brought in with this last round, this credit facility, is going to serve us well, not only on greenfields, but also with M&A. We're really pleased with our partners that came in with us, BMO and Oak Hill. And so, look, they've got scale, and they brought scale to us, and they can grow with us. And we're coming at this from a position of strength. And we think 2024 and 25 are going to be big years for us. We wanted to go on the offensive and be opportunistic. We're starting to see, acquisition multiples come back to reality and be a better value for us. But we're going to play our game. And we think the trifecta in this industry is, can you deliver a great customer experience, run great ops, but also open up profitable greenfields and do smart acquisitions? And if you can do all three of those, you're going to set yourself up for great success in this industry.
And David, since you're planning to expand here, talk about the decision of where you're going to be placing some of these car washes, especially as we're expecting an economic slowdown next year, if not a recession.
Yeah, our footprint today is, just think of this triangle between Tennessee, Florida, and Texas, and densifying within that triangle. But we also have a really good footprint from, Minneapolis to Salt Lake City, that upper part of the country. We think we're a brand that can go coast to coast. But the trend that's going to happen in this industry is going to be densifying within these many markets. You want to be able to offer reciprocity, or the ability for the consumer to trade across your different sites. And so densifying, whether it's with M&A, greenfields, or both, is going to take on more importance. And look, that's that idea of fortressing yourself off in a mini market or create moat building. But that's good for the consumer, because whether you're going to pick up your laundry, grocery, daycare, whatever, we want to be available so that if you join the club membership, you can use any one of our sites. And so densification, or that moat building, is going to continue to take on more prominence. And we think what we've brought in with this last round of funding and this growth capital is going to serve us well in that respect.
David, while we're talking about the U.S. consumer, I do have to ask you about what you're seeing over in China. As a board member of Yum China, this is a company that is looking to expand at a time when the company's also warned about softening demand. What are you seeing in the Chinese consumer right now at a time when there are real concerns that this slowdown could accelerate further?
Yeah, I've had 2 trips over there since late September. And look, Joey, the CEO of Yum China, is a phenomenal CEO. And she stated, hey, we're going to grow. We've got a 3-year growth plan of 14,000 sites today to 20,000 sites. And when I was over there, I think they're set up very well. Yum China, and KFC in particular, is great value for money. It plays well in that environment. And so I see them being able to continue to excel and grow in that area. And you have to remember, China is still an $18 trillion economy with a projected growth rate of 5%. So, if you think about the growth on that, you're actually producing about 2 Vietnams a year just on growth alone. And that's, the Vietnam economy is 450 billion. So if you put it in context like that, there's plenty of opportunity to penetrate across all their different brands that they have in China. So I like the hand that they have in this environment.
Yeah, some good context there, David. Even though we're talking about a slowdown, it is still an economy that's growing roughly 5%. David Hoffmann, Mammoth Holdings Chairman and CEO. It's good to talk to you today. I appreciate the time.
Thanks for having me.